Hi everyone, welcome back to our channel. So in this video we will discuss more on the trading psychology. So this is a topic which most of the traders would not consider learning, right? So they would directly have the capital and they would directly get involved in the market. But when we are playing around in the market, with the money, so basically the psychology will actually matter a lot, and based on the human mentality, right? So the mentality changes from person to person, right? So similarly, because of the personality of that trader, the psychological pitfalls are different from person to person. So there are certain rules that we need to follow as part of the trading psychology. So let's go through that. So first is different phases of the trader, right? So if you see, the first phase is learning to trade. That means anybody who is in the market today who claims themselves as a good trader, definitely they would have gone through these phases to become a trader. So nobody can start on day one, in the third phase, which is a trader phase. So anybody in this world who is into the stock market should first begin their journey to learn the trade. That means they should understand some of the basics of the stock market. They should understand what are the different things, like for example, intraday trading, positional trading, or swing trading, right? So similarly, what is futures, options, and what is the risk involved in each of these things. So that is how we generally get started, anybody. So once you have that basics and once you try out different things, then you actually move to the second phase, which is becoming a trader. So if you want to assess yourself in which phase you are in, so it's a very simple logic. So if you are in trading career for some time, and if you are at least making an even a breakout, that means like you're not really into too much of losses, or at the same time you're not into too much of your profits. So let's say that you started with like 5 lakhs or 10 lakhs, and you have traded for like last 6 months. So in that time frame you would have earned some money, you would have lost some money, but finally after 6 months, if you just see back into your trading account, you will be somewhere in the same level, or maybe plus or minus here and there. Then I would say that you are actually becoming competent, because in the whole trading career, right? So the important thing is to protect the capital. So if you are able to protect your capital, that means what is the what are the risks that you have taken, when not to trade, when to trade, what is the lot size you have to trade, all those, some of the basic things. That's where you're able to protect the capital from last 5 or 6 months, right? If not, you would have completely washed out that 5 or 10 lakhs within like maybe 2 months or 3 months by now, right? So that is where a lot of us should spend time in the first phase, where you're trying to learn the trade or experience the trading, during the trading, whatever emotions that are going in your mind and all. So that is the first phase. And once you're trying to come into a break even, that is when I would say you're becoming a competent trader. That means you are making some money, you're losing some money, but end of the day, it's not completely you're learning a lot of things, right? But it's not completely washing off your capital. So what is the third phase? So the third phase is the trader. So this is the phase where you are actually gaining that expertise of how to trade. So that means, if you're claiming yourself as a trader, that means you should have a proper trading plan. You should have a proper trading mindset. That means you need to control all your emotions. What is the lot size that you're going to trade. What is the maximum risk that is involved in a given trade. How to do the money management. So that means when you're in a trade, and if the trade is in your favor, when to book the profits, or when to get out of the losses. So all that. So don't claim yourself as a trader if you don't know all these things. So most of us, I would say, since we already know the stats that 95% of the people lose money because they think themselves as a trader while they are in the first phase. That means they are only a beginner, but they think themselves as a trader, and they put a lot of money, they take a lot of risk, and they don't know how to manage that risk. They don't know any money management principles. They don't know what is stop loss. They don't know what are the targets. They don't know anything about. They don't have a trade plan, if I have to keep it simple. So they put all their money, they lose that, and they will exit the market. So in that 95% of the traders who are actually losing money, I would say like at least 80 to 90% of that 95% are actually beginners, and they will be they will be exiting the market, right? And maybe some percentage of people may be trying to have a break even kind of a thing. That means they are able to protect the capital and all, but maybe because of some wrong trade, or maybe on a given bad day, right, they might have washed out maybe like 10 or 20 or 30% of the capital, because of which they might have exited the market thinking that market is not for themselves, for such kind of people. So ideally what we need to do is we need to spend a lot of time when you're in phase 1 and phase 2, and your objective is to only protect the capital. So don't even think about making profits, and don't even think about dreaming big. But what I would say is try to protect your capital. So if you're starting with 5 lakhs and if you're protecting that capital for 1 year, that is really a great achievement. So then you can actually think of becoming a trader where by then, right, in that 1 year time frame, you know what is right, what is wrong, and all this, whatever the basics of the trading world. And then actually that is when you can aim to take some more risk, and you can aim to get some more profits, and slowly you will move to that mastering that trading. Okay, so this is about the 3 phases everybody has to go through. And this is almost same thing what we discussed. So these are the different phases of trader, like beginner, novice, competent, expert, and master. So if you see here, sorry, if you see here in the beginning, you will be losing some money because you are learning a lot of things, and you're trying to experiment a lot of things, and slowly you're making the money curve starts slowly going up, and somewhere here you will kind of become a break even, and then you will eventually get into the profitability. So by the time you are in the break even, you would know what is right, what is wrong, and how to trade and all this. And after that, once you have a trade plan and all that discipline and everything in place, then you will start to make profits in the market. So that's what everybody has to go through this. And if you see, time is one of the important component. That means you cannot let's say you're starting here today, in 1 month you cannot go here. So you have to go through every phase. You have to be in the market, and you have to learn all your mistakes. You need to be experienced, right? So that's when you will slowly start making your money. So if you have to stay for so many days or so long in the market to move from here to here, so that means how will you stay? You cannot stay in the market if you are losing the money, right? So you can stay in the market only if you are protecting the capital. So that should be your first objective. So the more number of days you are able to protect the capital, where you're not completely washing off your capital, you will eventually learn all the mistakes and all these things, and slowly you will start moving into the profitability path. And this is a wheel of success, where if you take 100% as a circle, so in that 50% is discipline, and another 25% is content, and the 25% is mechanics. So content is nothing but whatever is your trading plan, trading methodology and all. Mechanics is more like how do you execute that, like on a day-to-day basis, right? Discipline is like how well you are able to stick to your rules. So that means in your trade plan, if you have a particular rule, right, so saying that I need to enter here, I need to exit here, how well you are you're following those rules. That is about the discipline. So if you see, majority of your effort should go into being disciplined. So first identify a trading methodology which is working for you, and then try to be disciplined to follow whatever is as per the trading plan. Market pays you to be disciplined. Yeah, this is very true. So whenever you are disciplined, market will actually help you out to get some profits. Whenever you're not disciplined, always you would be punished. Again, obviously, market may not know what is your inner thought, but the more risk you take, the more you're trying to go against a particular thing, right? So obviously you will be in losses. Be disciplined every day in every trade and the market will reward you. But don't claim to be disciplined if you are not 100% of the time. That means, let's say in a given month you took 100 trades. So in all the 100 trades you need to follow whatever the trading rules that you have written for yourself, right? Else you cannot say yourself as a discipline. That means in that 100 trades, if 90 trades is something you were disciplined, and the 10 trades is something you could not conquer your emotions, and you could not manage that properly, still you cannot claim yourself as a disciplined trader. So everything you are doing in market, you should follow whatever the guidelines you have written, whatever the trading strategy or trading plan, and then accordingly you need to follow it. Always lower your trade size when you're trading poorly. Don't turn small loser into big losers. So this is one of the major mistake many of the traders, what they do is, if you read it again, always lower your trade size when you're trading poorly. But many of the traders, what they do, they increase the trade size when they're trading poorly. Because let's say that you had 3 consequent losses. Now what your mind would say is, let me take a larger position or a bigger position, a bigger lot size in the 4th trade, so that you can recover all the losses that you made in the trade number 1, 2 and 3. That is how your mind will provoke you. But if you are thinking logically, since you made consequent 3 loss making trades, that means you're not doing good. So that means your 4th trade lot size should be less, right? So that is where the common sense should come in. So don't go just by your mind saying that let me recover all my losses. That's never going to happen. And in that 4th trade, at least 90% of the times, because you are under tremendous pressure because you lost 3 trades in a sequence, your 4th trade also you would have gone with a wrong setup, and since your lot size is also more, there may be a risk of completely washing out your your capital. So that's where don't increase the lot size if you're trading poorly. Never turn a winner into a loser. So this is something in market, right? So for example, when you took a trade, and if the trade is in your favor, so don't let that winner trade get into loser. That means, let's say I took a trade, now I'm in a profit of 1,000 rupees. Now you should have a mechanism where you lock that 1,000 rupees. So you need to have something called as a trailing stop loss or trading stop loss, whatever you call, so that in that 1,000 rupees at least you're locking at least 300 or 400 rupees, right? So if that stock is not moving in your favor, and if it is coming down, at least you're locking that 400 rupees for you as a profit. So that means at the end of the trade, you're at least walking off with some profit of 400 rupees. But what many people do, when they're in a profit of 1,000 rupees, they don't put any trading stop loss. They will just wait and watch for the 1,000 rupees to become 5,000 or 10,000. If it is working in your favor, well and good, it may even become 5,000, 10,000. But if it is not working in your favor, then there is a risk of losing that 1,000 rupees profit. Along with that, if you don't keep the stop loss, you may also lose some of your capital. So that is what is one of the major issue with most of the traders. So whenever you are getting into a trade, you need to know what is your target, what is your stop loss, and what is your trailing stop loss. So stop loss is nothing but when the trade is going against you, that is the level where you have to book and exit. What is trailing stop loss? Trailing stop loss is where the trade is going in your favor. That means you're getting some money, but you don't want to book it because you're expecting some more money. So at the same time, you don't want to lose that whatever money you earned. So you will put a trailing stop loss above your cost price. So in that way, it will lock certain amount for you. Your biggest loser cannot exit your biggest winner. So that means, let's say that you took 100 trades in a month, right? So out of that 100 trades, there may be some losers and some winners, right? So you should not trade in such a way that you have one biggest loser. That means let's say that out of 100 trades, 19 in the remaining 99 trades you made some money, you lost some money, that's fine. But in one trade you have lost like half of your capital, right? So that should not happen. So when it's nothing but the average of your winner, whatever the number of winning trades, the money you got, the average of it. And if you see the average of the the losing trades, it should not be more than the average of the winning trades, right? So that's where you should that's more of discipline about and money management, right? When do you want to book the loss or profit and all these things. Develop a method and stick with it. So this is something we already discussed. You need to have a method in place and follow that consistently, so that you will basically get profit out of market. Learn to accept your comfort zone as it relates to trade size. So if you see here in market, many people, what they do is they try to copy others trading style. Okay, that means, like, let's say on the Twitter you would have seen someone's tweet saying that they purchased maybe 10,000 quantity of Nifty or 10,000 quantity of Bank Nifty or something like that. So, and they made maybe 5 lakhs, 6 lakhs profit. That's how they post. See, he or she may have done it. Okay, that is their their mindset, and they would have been in market from many years. We don't know, right? So we should not compare ourselves with others. So if you see here, if you see this picture, it is you can see that this guy is trying to eat such a big burger. Okay, but how I see this is how I see is this burger is kind of eating this guy. The reason being, see, this is not something up to his capacity. Okay, so he's trying to eat so much, he may complete it. Okay, but after some time he will have a lot of problems, because of which he might have to feel uncomfortable, right? So that is what in market as well. So take the position size where you feel comfortable about it. Okay, so if you are comfortable about taking 2 lots in Nifty, do 2 lots and try to earn money in that. Be consistent, and then you increase the 2 lots to 3 lots or 4 lots or 5 lots slowly. But just that your friend is taking 10 lots in Nifty, don't copy him. Okay, he may have caliber or he may be better person than you. That's okay, that's fine. That is his way of trading. But don't try to copy your other persons. And always your trade size should be in your comfort zone. That means whatever the lot you are purchasing, and assume that if you are purchasing for overnight, right? So you should have a peaceful sleep. And if you are doing an intraday trading, let's say for some reason, for half an hour or 1 hour there is a power cut, or maybe the trading terminal is not working after you took the trade and all, right? So you should be feeling comfortable. You know that, okay, this is what the number of lots I took, this was my stop loss, these my targets, so I'm okay. If the trade is going in my favor, I know how much to book. If the trade is not going in my favor, I know how much to lose. So when you have all these things clearly sorted out, you will not feel uncomfortable, right? But what lot of traders they do is they take a very big size, a big lot size, thinking of others, and in one trade they completely wash out the capital. That should not happen. So increasing the lot size should happen gradually. Keep calm and come back tomorrow. So let's say that today you have maybe 1 or 2 loss making trades. So what many people try to do is they try to recover that loss on the same day. Okay, don't do that, because if you have already lost two trades in a given day, obviously you would be under tremendous pressure, because that mindset, right, it will be always in your mind, thinking that okay, you already lost 2 trades. So the third trade is something you'll always try to cover up all the losses. So don't do that. So if you're not doing good on a given day, that's fine. Log off from the terminal and take a day break or 2 days break. Come back later and just try to understand what went wrong. And if you can correct that mistake, you correct that mistake, and then you come back on a new day with a new trade. That is much better than on the same day trying to under pressure trying to perform and all. That's not gonna work. Earn the right to trade bigger. So this is what something we discussed, right? So just by looking at somebody else quantity of trade, don't go with it. So you have to earn that right. That means you should be consistently performing at one lot size on a particular stock or index, and once you feel comfortable that yes, you are doing good for some days, then you slowly increase your lot size. So let's say on Bank Nifty you start with 20 lot size, you do for like maybe 1 month or so. If you are earning consistently, then slowly go to 40, then slowly to 60, 80, 100, so on. But don't straight away start with 500,000, 10,000. Just that you have money, don't do that, because you don't even know how to manage smaller lots. If you don't know that, obviously you will not know how to manage the bigger lot size. Get out of your losers. So whenever if the trade is not working in your favor, you need to know when is your what is your stop loss level and all, and you need to book out of it. So don't hold on to that forever. So what many traders they do is they when the trade is not working in their favor, they try to just hold on to that for days together, and eventually that will turn out into a big loss, and it will completely wipe off your capital. So don't do that. Whenever, before you get into a trade, you need to know at what price you need to buy or sell, and at the same time you need to know what is your targets, you need to know what are your stop losses and what is your trailing stop loss. Only when you have these 4 or 5 points properly in your mind or on a paper, then only you need to get into a trade. Okay, so if you are taking a trade and if you're not putting a stop loss, there may be a chance it might completely wipe off your whole capital, especially in futures and options section. Don't hope and pray. If you do, you will lose. So again, this is something very basic. Like, you have taken a trade, it's in the market, there are millions of people who are interacting with each other for the trading on that index or a stock, right? So just by praying, it doesn't change anything. Okay, so it's better you just have a trading plan, follow proper levels and all. That's fine. Praying will not really change anything for you. Don't worry about news. This is one of the thing which novice traders or the fresh traders will always believe in. See, what they believe in is the news is driving the stock price. Okay, which may or may not be correct. But for example, let's say that if for Q1, let's assume that Infi gave a good results. Okay, and that time the price went up. Okay, now let's say in Q2 Infi again gave much better results than Q1. Okay, but still the price went down. Why? If the news is the factor, in both the quarters the results were good, but why did the price go up at one time and the price went down in the other time? Because see, there may be a lot of other factors that may be playing as well. So it's not just about news, right? So maybe the stock would have run up so much that in the second time it started correcting. Right, so see, news can trigger the whatever the momentum, but it may or may not leave completely, because if you see a lot of times because of election results and all, the market may have gapped up, and then after half an hour or so it completely washed off that gap up, whatever the gap up points. Similarly, there may be a lot of negative events where the market may have gapped down, but after half an hour or maybe towards the end of the day, it might have completely recovered, right? So it's not always news. So news might give you a knee-jerk reaction, but in the medium to short term, it's all about the technicals and a lot of other factors that comes into picture. So that's where don't spend a lot of time looking into the news channels and worrying about it. It may or may not really matter much if you know how to trade and how to follow all the trading principles. Don't speculate. If you do, you will lose. So speculation is something like, see, a lot of people think stock market as something like something like a lottery or something like a casino and all, right? So where they come with like 10 lakhs and they wanted to just make it as 1 crore, maybe in like 1 week, 2 weeks, or maybe 1 month time frame. That will not happen. So if your mindset is so, what you will do, you will just take the 10 lakhs, you'll try to speculate on a stock or whatever the index on a given day. If it works in your favor, let's say that 10 lakhs becomes 20 lakhs, you will not keep quiet. Again, that 20 lakhs you will try to do something else with that, and then that 20 lakhs will become 10 lakhs, and again with 10 lakhs again you will do something, and that will become 5, and then eventually 0. Right? So the speculation will not work always in your favor. It may work once or twice. So that's where it's better to not to speculate, go with a proper trading mindset, trading plan, and have some rules and all in place, and try to grow slowly. Okay, don't try to dream as if like in the next day or in the next 2 days you're gonna double the money. That's never gonna happen. Okay, a lot of people may promise you over the internet and over the Twitter channels and all. That really doesn't work in that way. Okay, you need to grow slowly in the market. Love to lose money, keep calm and cut your losses. This is what we discussed. Don't try to maintain a trade which completely takes off your capital. If you see, let's say you have 100 rupees capital, okay, and in the first trade you lost 5 rupees. So now what is the capital that is remaining with you? 95 rupees. So for you now to make that 95 rupees to 100 rupees, you have to gain 5.3 percentage. Okay, similarly, let's say that 100 became now 50 rupees. Okay, that means 50% is washed off. Now for you to make that 50 rupees to 100 again, you need to gain 100 percentage, right? You lost 50 percentage, but now for you to make that 50 rupees to back to 100, you need to gain 100%. That means you need to double the money, right? So just see here, if you have lost 90 rupees out of your 100 rupees capital, you need to gain 1000 percentage. You need to make the 10 rupees to 100 rupees. Okay, you need to gain 1000 percentage. It's very, very difficult, right? So that's why try to protect your capital. Don't lose so much that, let's say that you started with 10 lakhs and now you have only 2 lakhs in your account. Then don't even think of making the 2 lakhs back to 10 lakhs. That will never happen. It's very, very challenging ask. So instead you take off the 2 lakhs from your account. Just take a break, try to understand what went wrong. If required, try to approach somebody to learn certain things, and then start slowly with some additional capital. And maybe if you are really disciplined and if you have corrected all your mistakes, slowly maybe you can start to grow that 2 lakhs or whatever the new capital slowly towards a good amount. Okay, but a lot of people whom I know, they call me up saying that I got into market, I lost a lot of money, now I am left out with only 10 or 15% of capital. Now I want to grow that back to 100%. That will never happen. Okay, in first case, if you are so good in the market, you will not lose 80 to 85% of the capital, right? Since you are not doing good, there may be a lot of reasons, right? Maybe your trading plan is not correct, maybe your trading mindset is not correct, maybe your money management is not correct, so your risk management is not correct, so because of which you might have lost 80% of your capital. Now if you want to gain that back with just the 20% of capital, it will never happen unless and until you correct all of your mistakes, and that will never happen so easily, right? So it is a gradual process. So that's why don't aim with that whatever the left out capital to come back into the market. If your trade is not going anywhere in a given time frame, it's time to exit. See, every trade or every trading methodology, it has a time frame. Okay, so for example, there are people who post trade saying that this is intraday. They post saying that it's a positional or a swing trade, whatever it is. So if let's say that if they posted it saying as an intraday trade, so what it means, on the same day it should either give you your target or it should hit your stop loss, right? So whenever you are getting into an intraday trade, your mindset also should be accompanied with that time frame. So since it's an intraday, at any cost you need to exit it on the same day, right? So that is how every trade comes up with a time frame. Okay, and if it is not going in your favor, or if it is neither hitting your stop loss, if it is neither hitting your targets, it's time to exit. That means your trade is going nowhere. So what is the point of just holding on to the trade forever, right? Instead, just exit the trade and try to take a new trade. Never take a big loss. This is something we just discussed. Let's say that out of 100 trades you did really good in 90 trades, but in that 10 trades you did not follow any rules, or you did not had any risk management, money management things in place, and you would have lost like 50% of your capital. So don't do that. So each and every trade you need to follow your rules. Each and every trade you need to have a proper setup, and then accordingly you need to trade. Make a little bit every day. So this is something we discussed. Don't consider stock market to be like a casino or a lottery where overnight you become a millionaire and all. That may happen in few cases, but it will not happen in all of our cases. So try to be patient enough so that you earn little bit every day, and in the long run, you gain that tag where you claim yourself as a good trader, and where you know how to what to trade, what not to trade, or when to trade, when not to trade, what is the lot size, what is the stock, what is the index you want to trade. All these things will be very clear in your mind on one day, and that is where eventually, if you just look back into your trading account, so even the money would have got increased. So that is what is the consistency. So don't consider trading as a T20 match. If you follow cricket, don't consider it as a T20 match where in 3 hours you want to completely close off everything. Instead, try to see it as a test match where the objective is to save your wicket. So in the test match, you won't go and hit every ball, right? You will try to leave certain other deliveries which are not in your favor, or which are complex in nature, and at the same time you try to take the delivery which is a loose delivery, and you try to score runs out of it. The same thing applies in the stock market as well. So don't try to play it like a T20 match. Instead, try to play it as a test match. So your objective is to protect the capital and grow slowly over a period of time. So hit singles, not home runs. So this is something we just discussed, where we should not be really much concerned or focused about doubling the capital every day or every 1 month or 2 months, whatever it is. Instead, try to grow gradually. Like whatever, if your goal is like 10%, just try to have the 10% every month, or every day, every month, every week, whatever the time frame you're looking at, and slowly increase your actual money. Consistency builds confidence and control. See, what many people do is they in the process of finding out a trading methodology that works for them, they continuously change their trading methodologies. Okay, so that is okay if you are just beginning in the market. Okay, that means maybe in the initial days you want to try a lot of things. Let's say you want to try super trend indicator, you want to try maybe like a Elliott wave, you want to try GAN, you want to try harmonics or something else, right? So in the beginning days you can learn all these things, you can experiment out, but once you understand a particular trading methodology that is working for you, don't change it. See, every trading methodology will have negatives and positives, but if that is working in your favor, don't give it up. Just try to follow the same thing, and over a period of time, when it will work, when it will not work, and slowly, if you want, you can slowly add some extra clauses, extra conditions to that trading methodology. But over a period of time, you will follow the same one. Don't change, keep on changing from day to day. That will not work. Learn to sweat out your winners. See, what many people do is the moment they see like some profit, they'll book it. Okay, which is okay, but at the same time, it's always good to let that winner run for some time. That means, like, if the trade is in your favor, let it run for some time at this, and wait and watch. But at the same time, don't lose out that profit. Instead, try to lock that profit using like trading stop loss or something, so that just wait as long as the trade runs in your favor. If it is not, if it starts to work against you, then your trailing stop loss will lock your profit, and then you can exit the trade as per your trailing stop loss level. But don't book it just in the beginning itself. It may be in a good formation where it will further give you a lot of money. Make the same type of trades over and over again. Be a bricklayer. So if you see like somebody like who works in this who is a bricklayer, what he does the same thing, right? So how many ever walls he constructs, he takes the bricks, he takes the cement, he knows how to place the bricks, how to place the cement, and he does this every day. So similarly, whatever the trading style you're following, try to follow the same thing every day. Don't change it every now and then. Try to understand the positives and negative side of it, and then slowly you will eventually get that money flowing into your account. don't overanalyze, don't procrastinate, don't hesitate. So this is where, like, a lot of people do over analysis, over technical analysis. What happens is, the more you try to analyze a particular stock, right, the more questions starts coming into your mind, because of which you may not feel comfortable in taking a trade, right? But instead, let's say that as per your trading methodology, if it is giving you a buy, just go and buy, and as per your trading methodology, whatever are your targets, wait for it. And again, as per your trading methodology, whatever are your stop losses, just put it in your system and wait and watch, right? But the more you overanalyze, the more question comes into picture, because of which you will not be able to take up the trade position. All traders are created equal in the eyes of the market. So don't see, this is one thing which we need to know, where market does not discriminate between you or me or somebody else, right? So at the end of the day, we all are traders, and we are trying to get some money out of the market. So market does not really discriminate. So it is you, because of your mistakes, where you don't follow the money management principles, disciplines and all, you end up losing the money. It's a market itself that wields the ultimate scale of justice. See, this is something when, let's say that you're losing some money, right? So always what people tend to do is they just blame somebody, right? For example, they blame, saying that market is volatile, because of which I lost money, or market gapped up, because of which I lost money, or something else. But end of the day, it was your decision to take a trade. It was your decision to whatever the index or the stock you purchased, it was your decision, the quantity you traded, it was your decision that you did not put a stop loss. So it was your decision. It's all your decision, right? So it's not that market asked you to do it, right? So don't try to put that blame on somebody else. So whenever you're losing, try to take that blame on you, so that you try to understand why did you do that, what was the mistake and all, and you'll correct that, so that next time you don't repeat that mistake. Okay, so with this, actually I'm ending this session. So hope this session is useful to you. So these are some of the rules that generally we need to follow, but what many of them do is they just oversee all these things, and they just try to get into the market, and end of the day they lose a lot of money, and then they will be out of the market, right? Instead, try to follow these rules, and try to be in the market for long. Don't try to gain something overnight. That will not happen, and that is not good for your health as well. So try to play slowly, and as I told you, try to play like a test match player, wherein you will be here in the market for long days, and slowly you'll start gaining your your profits. Okay, so if you like this content, do like and subscribe, and follow our channel. And also you can follow us on the Facebook page, wherein I would be updating some of these presentations, as well as some of these trades that I take as part of harmonic trading framework. So you can follow us and learn from us, and any feedback you can always leave it on the video comments. We'll be happy to look into that feedback. Thank you.